Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO's NIO stock and Tesla's TSLA stock. We're going to be going over their latest news updates, upcoming catalysts, as well as what I personally think of these companies. For today's video, we will be analyzing two articles, to where the first one is titled, Why NIO Stock Tumbled 10% Today, and honestly, this was actually on Tuesday when NIO's NIO stock dropped by around 10%. So we're going to be doing a quick update on NIO, which is an electric vehicle maker located over in China. After that, we're going to move on and talk about Tesla's TSLA stock regarding how Cathie Wood recently went on CNBC to reiterate her $1,400 price target for Tesla's TSLA stock. And she believes they will reach this price target by 2027 as a worst case scenario. So we're going to be discussing why she could be right, why she could be wrong, my thoughts on this overall projection, and what I think of Tesla over the next few months. So for more videos on electric vehicle companies like NIO or Tesla, go ahead and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Let's start off talking about NIO's NIO stock, which recently dropped by around 10%. And like I said earlier, NIO is an electric vehicle company located over in China. Shares of NIO's NIO stock recently dropped by 10.4% on Tuesday, and they really only have themselves to blame for this. Currently, NIO's share price trades for $8.81, while the very bearish negative naysayers believe this company is going to be worth around $7 over the next 12 months, while other more bullish analysts believe this company could surge up to $21. But why did their overall share price drop so dramatically on Tuesday? Well, let's jump right into it. The reason for this is because NIO announced that it had plans to offer $500 million worth of convertible senior notes that are going to be due in 2029, and then they also are planning to issue another $500 million worth of convertible senior notes that are going to be due on 2030. So together, we are looking at $1 billion of overall debt. But don't be confused by the terminology that's being used here, because when we see convertible, that means that these notes or debts can potentially be converted into NIO stock, which is very bad for NIO shareholders. So with NIO taking on $1 billion of debt in a bid to raise cash to keep the company afloat while they continue to burn capital just to stay in business due to their negative free cash flow, this has not reflected positively on investor enthusiasm. Now, there is good and bad news here. The good news for NIO is that the company is raising cash and they will stay in business longer, and hopefully it will give them time to eventually achieve profitability where they can keep themselves afloat. Also, some of this debt will be used to roll over older debt. And for the money that NIO doesn't use for this purpose will be used mainly to strengthen its balance sheet, meaning that it's just going to carry more cash on hand. Now, that would be the good news. The bad news is that this debt is convertible into NIO shares, which could dilute existing NIO shareholders. And if they do convert it, it will dilute existing shareholders, meaning that current owners are going to own less interest in the overall company, and this is going to reflect very negatively on their overall share price. And since NIO is taking on debt while the company is still not earning a profit on its own, this is not giving investors confidence about the future projections of this company. And here's why this is detrimental for NIO. They reported last year a staggering $2.1 billion worth of losses and negative free cash flow, coming in at $1.6 billion. So their cash burn rate is very high, and if they end up running out of cash, the company could potentially go out of business. However, luckily, other metrics say that this company should become profitable at or around 2026 or 2027, to where they could keep themselves afloat and bring in loads of profit from that point onwards. But in the meantime, the share price could go even lower. So until NIO figures out how to earn a profit by selling electric vehicles, investors should anticipate further volatility in this overall company. Clearly, if you are in this company, the share price could go even lower, so please be prepared for that. And that's why we don't want to over allocate ourselves more than a 5% initial portfolio allocation to any singular risky growth company, including NIO shares. Now, over the long run, this company could prove themselves fundamentals to be extremely profitable, but unless you're willing to hold this company from 2026 onwards, this may not be a good strategy for you. Now, what I'm looking forward to is their upcoming earnings report, because since we are in the second half of 2023, this is when their financials are anticipated to absolutely blossom from now until 2026, which is when they are projected to become profitable potentially. So in the meantime, the share price could be extremely volatile and it could go as low as $6 to $7 or potentially even lower than that. But once their earnings reports come in, we could see new excitement from investors based off of their very impressive financial growth rates. But again, this is an extremely speculative company. Always make sure to do your own research to determine if this company is right for your own personal portfolio and if you have enough risk tolerance to stomach the volatility. But that's essentially why the overall share price of NIO dropped very dramatically lately, and again, we could anticipate further volatility. But that's talking about NIO, which is an electric vehicle company located over in China. Now let's talk about a much better electric vehicle company located over in the United States, which is none other than Tesla. Cathie Wood, if you didn't know, has predicted that Tesla's TSLA stock will skyrocket up to $1,400 by 2027. So we're going to be going over whether or not these projections are valid or invalid. And the reason why this has come back up in the news is because she originally issued these statements many months ago, but recently she appeared on CNBC's Fast Money to talk about her overall Tesla projections. Now, many investors believe that ARK Invest and Cathie Wood of ARK Investment Management is becoming less bullish and more bearish on Tesla, considering that two ARK ETFs, which are exchange-traded funds, have sold off Tesla recently in the last few months. However, they did not sell their entire position. My response to this is that ARK Investment Management, or ARK Invest and Cathie Wood, is simply rebalancing their overall ETFs, and none of these sales involved a significant chunk of their overall Tesla holdings. The reality remains true that Cathie Wood is extremely bullish and positive when it comes to Tesla's TSLA stock. And because of this, that's why she was invited on CNBC's Fast Money program to talk about her future price targets for Tesla. And on that program, Cathie Wood said that Tesla stock could skyrocket up to $1,400 by 2027. However, their current share price is around $265, while the low-end bears believe this company could fall to around $240, while the higher-end analysts believe the company could surge up to $400 over the next 12 months. But let's talk about this $1,400 price target by 2027, which is essentially over the next 4 years. Cathie Wood highlighted that this is her bearish negative case, meaning that this is her most calculated and worst case scenario or minimum that Tesla stock could be worth. And here's why she has such a high price target. Cathie Wood sees strong sales growth for Tesla regarding their electric vehicles in the future, especially as Tesla continues to try to roll out a $20,000 electric vehicle. However, she went on to tell CNBC that she believes their electric vehicle sales will only make up around 1/3 of their overall valuation in terms of their overall revenue. The other 2/3 will actually come from autonomous vehicles, particularly their robo-taxis. To where if somebody buys a Tesla and it has full self-driving capabilities, it can act as a robo-taxi. And if you're familiar with Uber or Lyft, where people will pick you up in their cars, drive you wherever you want, and you pay those institutions through the app to where the driver gets paid and the company gets paid, that will work very similarly to Tesla. However, in Tesla's case, there will be no driver. The car and vehicle will literally drive itself to where you will have an app on your phone, you will insert an address, and then the car will take you to that address. And with this autonomous ride-hailing service, ARK detailed that Tesla could generate an annual net revenue in the ballpark of around $200 billion by 2027 from this overall service. And again, that is the worst-case scenario according to ARK Invest. However, I do want to make you aware that Tesla does not have a robo-taxi service right now. However, ARK Invest anticipates that the company will launch one relatively soon in the beginning of 2024 or even potentially at the end of 2023, which we are in right now. However, let's look at this overall projection very logically. There are a plethora of factors that could prove Cathie Wood's prediction wrong. The number one thing would be competition. There are around 3 to 4 companies right now that already are further ahead of of Tesla in this regard. And that would include Uber's collaboration with Waymo, which is an Alphabet company. And Alphabet, if you don't know, owns companies like Google, YouTube, as well as Waymo. So many of Tesla's rivals have already implemented robo-taxi services in select US markets, specifically over in California. However, Cathie Wood responded to this by saying, and I quote, "Tesla is in the pole position here in the United States." And she believes that Tesla will command a robo-taxi monopoly over the overall market. And she thinks autonomous ride-hailing will be a long-term winner for the overall market, making Tesla an extremely good stock to own, especially before this boom happens. She also believes that this will save a lot of people's lives because we know that texting while driving or even drunk driving takes many people's lives. So Cathie Wood thinks that this shift toward autonomous vehicles and artificial intelligence will help address these issues. It was also stated that Tesla's full self-driving capabilities is, quote, 5 times safer than a manually driven Tesla, especially in regards to city streets. But none of this actually tells us about the financial projections. This is just wishful thinking, and although I agree with Cathie Wood that this is going to be a gigantic market that Tesla will achieve a large portion of as long as they catch up to their competition, let's actually talk about the numbers here. For Tesla's share price to approximately 5x over the next few years can be looked at as relatively unrealistic. And again, this would make Tesla one of the best investments on the stock market right now. This could literally make millionaires. However, we need to approach this in a very intelligent way by being a risk-averse investor, by only investing a little bit into Tesla, because right now their accounting ratios are absolutely insane. They are very high. So it really depends on the company's rollout of their robo-taxi services, their $20,000 electric vehicle, and some believe that both of these, or at least one of these, could happen during the fourth quarter of 2023. However, I don't think we are going to see that. I think these developments are going to happen in 2024 or beyond. But you should be aware that Tesla's CEO, who is Elon Musk, did say in the company's second quarter conference call that he anticipates the company's full self-driving technology to be, quote, better than humans by the end of this year. However, he also said that he's been wrong before in the past and he may be wrong this time. So clearly, they are still trying to improve their full self-driving capabilities because there are some problems with this technology. For instance, I'll cite 2 problems for robo-taxis and even fully self-driving cars. For instance, these cars are smart enough to avoid traffic cones and construction zones. However, companies have faced a problem to where people will use construction cones to hijack vehicles. So if I have a construction cone and you have a fully self-autonomous vehicle that is programmed not to go into zones with construction cones, I can simply place an arbitrary construction cone in front of your car and in the back of your car, and your car is now frozen and it won't move anywhere. So you could be robbed or they could hijack the car. Another problem that these autonomous vehicles are facing is when it comes to emergency vehicles and flashing blue and red lights or even red and white lights for things like police officers, an ambulance, or even a fire truck. For instance, the same thing could happen. The car could be programmed to get out of the way of these vehicles. However, if I have lights on my vehicles or even fancy flashlights, I could trick the vehicle in thinking that an emergency vehicle is pulling them over, so I could make somebody pull over and again, carjack them or rob them or something of that nature. So these are problems that still need to be solved here. But overall, I think that Cathie Wood is slightly too bullish and it's unrealistic to think that Tesla will achieve this price target that soon. However, I do think once Tesla gets their full self-driving technology under control and they do overtake the competition in the robo-taxi market, then Tesla could achieve share prices in that range, specifically over $1,000. But I think that 2027 is too soon for this to happen, but I would love to hear your thoughts down below on both NIO and Tesla. Don't forget to go and annihilate that like button, especially if you made it all the way to the end of this video. Subscribe if you're new, comment your price targets for NIO and Tesla down below. Don't forget to become a member of this channel for as little as 99 cents. And with that being said, I will see you in the next YT video.